Hi, everybody. This is Gary Dean, and this is our video report for Monday, February 12th, 2017. Bulls continue to push ahead, but there's, like I put in the morning notes, there's a lot of timing factors that I follow, and there's a lot of them that are looking for some type of high to hit this week, and it could be the high that actually ends this rally that that started all the way in November. Where does it top? That's a good question because it's very strange the way that we've actually made it to where we are right now, and my reasoning for saying that is we've had three gap ups to new highs. So you had this one here, we had one on Friday, and we had one again today. You don't really see that often at tops because it's almost like this is the chasers right here, or these are your say shorts covering because from these levels down where we were when the rally started, you could see gap ups here. Makes sense because people are trying to jump in and get in. But when they start taking place at the top, it's a red flag because people are chasing right now. They're not believing that it's going to go down. And trust me, I know I've been saying this for a while that everybody has to kind of believe that the market's not going to go down and people are going to chase and shorts are going to cover, and that's usually when we get the move to the downside. And I mean, I'm not gonna lie, I'm sitting there saying, my gosh, man, is this thing ever going to go down? So I'm questioning things, but it's you just I've been through this so many different times. And this one is different in the sense of, you really don't have Fed that's backing it in. I mean, I think that I'm not calling it a bear market or anything that's going to be starting because I still think that there's money that's going to be coming from all over, basically Europe, I think is the primary one. That money's going to be coming to our markets for protection because I think a lot of people are seeing the writing on the wall for the euro. So they're going to try to move some money out of that and into our market. So I don't believe we're going to be starting any kind of bear market. I do believe that we can see a 200-point drop, and from the grand scheme of things, a 200-point drop from the 2085 level, it's still bringing us someplace just right here. We're not even below these levels, but what that would do is actually give us some kind of test of support right here, and that would convince a lot more people to start jumping into the market because support held. Now, I'm not saying it's getting down there. What I'm anticipating is that we're probably going to see a test of the 200-day moving average. We're well above that right now. Whenever we hover up there with the bearish divergence, typically it will come down, pause at the 50-day, get a little bounce, suck some more people into the market, and then from there we get the big drop down to the 200-day moving average, and that's at 2165, and kind of where I believe we're going with once this market does mark a top. So I've been showing you this wave count. We have 1, 2, 3, 4, and now what happens is we're making a wave 5. So once this ends, that's when I've been saying I'm anticipating that the next move to bring us someplace down into the 62 or 78% retracement, which is 2178, 2136. So we have to, this has to play out and finish. And once it is, I mean, I didn't think it was going to be getting this high, but like I said, the gap ups are not, today wasn't a massive gap up, don't get me wrong, but it's still another gap up on it. But it's when it does make this top here, what we've known, if history is going to be our guide, is that when you press up like this with not a whole lot of breaks, or let's say to relieve some of the pressure on the long side, it drops and it goes down 3, 4, 5 times faster than it went up. So we have the 5 waves. Now what we have to do is kind of back out and find out where we are on this 5th wave, because typically what happens is they're all going to form 5 waves, and when you get a wave 5 of 5, that's telling us that the top is getting close. So you can see that we're within this. I'm kind of changing the channel around because it's going, I'm just putting it from these lows and then, putting them at the tops. If it starts breaking above that, then I would just have to move the channel up to this level. But right now we're at a level where we're close to it right here. We hit a pivot. I said keep an eye on the 2330. We went up 2331, pulled back a little bit at the end, but nothing major. So we're at levels that it would make sense for some type of turn. And this is the 15-minute chart. And again, we have bearish divergences on this, very overextended. And I think this is really is going to sum up. Actually, I'm going to show you on a 5-minute chart because it's a little bit easier. But it's basically we have our weight. I can get these out. Hang on one second. Okay, so basically what we're really looking at is we have a wave 1, 2. Now this is most likely your wave 3 because you can tell the way it's just kind of pressed up without any breaks. That's what your wave 3s look like. So now what would make sense is we get some type of wave 4, maybe down to the 2318, and then we have a wave 5 that either comes up and just tests the highs and you get a failed wave 5, or we go a little bit higher and it goes down to the 23, 33, 23, 35 area, and that completes the wave 5. And if you go back, this would be the wave 5 of a 5. So I do, like I said, I have a bunch of timing models that I follow that are all looking for some type of top this week. We have the wave count that fits. We have bearish divergences, and now it's really just a frustrating part for where they're going to make the bulls chase and try to get not a single bear in the market when it turns. But that's pretty much all I have for tonight. So let's see what plays out tomorrow. And with that, have a great night.